Good afternoon. You're watching Business World Live here on One News. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Thursday. All right, share snapping 3 days of gains today as the benchmark slipped 0.7% to 7,369. That drop comes after 2 days of trading above the 7,400 level. This is offshore investors return to buying mode or selling mode rather, letting go of some $10.8 million worth of local stocks. There might be room for more upside, though, at least according to analysts from First Metro Investment and the University of Asia and the Pacific. They see a 7,500 finish to the end of the year, or if not, at least by the first month of 2022. While spike in crude oil prices tempered gains, they say that the easing of restrictions and quicker vaccine rollout further buoyed that positive sentiment among investors, cementing their view that we have entered bull market territory. Not reflected today on the local bourse, though, as decliners beat advancers. You'd see here Converge is a day's worst performer, down 3.7%, even as the internet provider bears that the FTSE has upped its investability weight. Now, on the other hand, you have one of our gainers, AC Energy, up by 0.5%. That's after they are set to redeem $82.4 million of 5.65% notes. The day's biggest gainer, though, is Wilcon Depot, up by 1 and close to 2% really here. The home improvement retailer advanced today together with its competition All Home, as you can see in this chart right here, represented by the upper chart in the yellow and orange line here. Both retailers start ending the day in the green here. This is IKEA opened its biggest store in the world. That's here in the Philippines. We're talking about a 730,000 square foot facility right at the heart of the Mall of Asia complex. Entry to the facility, however, is still on an online reservation basis and is already fully booked for the next 2 weeks, despite the excitement. SM Prime today down 1 and 2 tenths of a percent, as represented by the white line here on the bottom chart. SM Prime ending the day at 37 pesos and 5 centavos a piece, while Wilcon and All Home are in the green at 31 pesos and 9 pesos and 70 centavos, respectively. IKEA's opening comes after months of delay due to the pandemic, but happens just right when the economy and consumer confidence are showing signs of picking up. As economic activity expands, Colliers is also anticipating a recovery to happen soon for the property market. To discuss that, we have their Associate Director for Research, Joey Bondoc. Good afternoon, Joey. Thank you for joining us.
Hi, Jess. Good afternoon.
All right, first, before we head on over to your outlook for next year, let's have a quick recap first, or at least a look at how things are faring so far for 2021. How's property demand looking so far this year? How are we going to end things?
Well, unfortunately, for 2021, similar to our forecast earlier, we are likely to see vacancy for office increasing for 2021. So we're likely to see 12 to 13% vacancy from about 9% in 2020. We're also likely to see an increase in vacancy in the condominium market, especially in the secondary market, which covers condo units that are for sale and for lease. Even for the retail sector, we're likely to see an increase in vacancy because there will likely be a revenge shopping and revenge dining in Metro Manila as the lockdowns are starting to ease and the government allows more people to dine in and to go to malls. However, we're not likely to see a significant improvement for the remainder of 2021, but perhaps in 2022, we're likely to see that recovery in the number of mall guests or the number of consumer traffic, as well as an improvement in rental rates across Metro Manila.
Give us an idea. What's the reason behind the slump? I mean, you would think that there would be some semblance of recovery, especially after that deep slump in 2020. Why then wasn't the sector able to at least cash in on that huge slump that we saw last year?
Well, mainly because for the entire 2021, this is an impact, Jess, of the disruption in the market back in 2020. Of course, we know 2020 severely affected by the COVID-19 pandemic. Demand really affected across Metro Manila, and this, of course, spilled over to
Mm-hmm.
2021. Office demand, we see a negative net take up, meaning the amount of office spaces vacated far outstripped the level of office spaces that was occupied, at least for the first 3 months of 3 quarters rather of 2021. We're also seeing that in the residential market. In fact, for the third quarter of 2021, there was a negative net take up or back out, meaning
Mm-hmm.
um, those who were served condominium units were not able to complete their payments, were not able to continue with their payments. So they had to return these condo units to the market. And therefore, we recorded the net the back out, at least for the
Mm-hmm.
condominium market in the third quarter of 2021. And of course, we still see that for the retail sector, while we see consumer traffic reverting to about 50-60% of pre-pandemic levels. Definitely, we're still likely to see vacancy rising for the remainder of 2021. Hopefully, over the next 12 months, starting 2022, there will be an improvement, and that should also result in recovery in mall rates across Metro Manila.
Okay, given that, like what you mentioned, economic activity somehow already picking up for the last quarter of the year. We're hoping, of course, for that momentum to carry over up to next year. How's that going to affect property demand for 2022?
Well, we are likely to see, consumer optimism, business sentiment improving over the next 12 months. That is based on the surveys released by the Philippine Central Bank, by the Bangko Sentral ng Pilipinas. And of course, that will have a positive impact on office demand, residential, and retail. So let me first start with the office demand. A lot of companies are implementing work from home strategies, schemes, right? But they continue to occupy space. In fact, our office leasing team remains busy. They continue to assist the clients that are occupying space within and outside of Metro Manila. And the condominium market, the residential sector, of course, its recovery will primarily hinge on the rebound of the office market as well. So if more companies will lease office space, more expats will return to the Philippines, that should have a positive impact on absorption of condominium units across Metro Manila. Now, speaking of retail, again, we are projecting revenge dining, revenge shopping that will redefine the recovery of the this sector, the retail market beyond 2021. A lot of Filipinos are raring to go, raring to visit malls. But what's positive here is that they're not just the shopping in a physical or brick and mortar space. In fact, they've also been shopping online. And
Mm-hmm.
we always say at Colliers, over the next 24, 36 months, the absorption of brick and mortar physical mall space will probably be affected by the Filipinos' growing propensity to shop online. Because if you're a retailer now, will you continue to occupy, say, a 500, 800 square meter retail space in a mall? Or since a lot of Filipinos have grown accustomed to shopping online, will you now occupy a smaller retail space? So from
Mm-hmm.
500 square meters, will you downsize to about 200 or 300 square meters? So that is something that the mall developers should observe over the next few quarters.
Now, which of these segments do you expect to recover first? Office, residential, or retail?
We're optimistic with office market. Well, let me start with the tenants or the occupants. As I mentioned, they continue to occupy space across Metro
Mhm.
Manila, and not just in Metro Manila, but even outside of the capital region. So Cebu, of course, leads other provincial sites in terms of take up. In fact, it has regained its top spot in terms of the provincial locations, talking about the office leasing transactions for the first 3 quarters of 2021. Others are looking at Pampanga, Davao, Cagayan de Oro. Iloilo remains very attractive. But we're also seeing green shoots of recovery for the residential market, for the condominium market. I think one proof is that developers continue to line up projects and
Mhm.
launching new developments, especially in the fringes of or peripheral areas of central business districts. In fact, we're projecting about close to 10,000 condominium units that will be completed the next year, from about 8,000 units in 2021. And then, of
This is
course,
across the
we
Philippines,
believe
not
that
just Metro
retail
Manila.
will. Sorry, Jess?
This is across the Philippines, not just Metro Manila.
Yes,
Mhm.
definitely. We just had our Cebu property briefing, and developers really have been aggressive in launching new projects, not just condominium, but even house
Mhm.
and lot only projects in these key urban areas. Of course, you have traditional demand that continues to thrive in other areas outside of Metro Manila. So you have Cavite, Laguna, Batangas that remain attractive among end users and those that are investing in their first house and lot or lot only project.
Mhm. Now, one quick touch here in the office segment, since you were talking about it earlier. One primary concern here would have to be the exit of POGOs. How's that going to affect the market?
Well, it definitely has affected the market just because 2020 vacancy was 9% from about 4.5% in
Mhm.
2019, and we know what happened in 2020. A lot of pogos returned to China, and they're now migrating or transferring to Cambodia, Laos, Vietnam, even Dubai. And in fact, in 2021, Pogo, at least for the first 3 quarters of the year, this Pogo sector has not been a dominant player in terms of office take up in the market. So they continue to vacate office space. In fact, at least for the first 3 quarters of the year, they've already vacated 450,000 square meters of office space. They used to cover 11% of total leasable office space in Metro Manila. This is down to only 6%. So this just tells you that the demand from the Pogo sector is significantly down so far for 2021. And again, we do not see the Pogo sector being a dominant player in terms of office space absorption in
Mhm.
2022. So the office market will have to rely on the traditional segments, traditional businesses, as well as the BPOs or outsourcing companies.
All right. Well, it's really hinging on the PPO sector, especially when it comes, of course, to the recovery of the office market. Thank you very much for your time this afternoon. Joey Bondoc,
Thank you, Jess.
Associate Director for Research of Colliers Philippines. Thank you, Joey. Stay safe.
Thank
Here are other headlines we're keeping our eyes on. The country's budget deficit rose by almost 28% to 1.2 trillion pesos in the 10 months to October. In the month of October alone, the Treasury reports that budget deficit rose 4.7% to 64.3 billion pesos. This comes as government spending surpassed growth in revenues. Spending increased 9% last month, while total revenues grew 10.9% to 253 billion pesos. Business groups are pushing back on the policy mandating unvaccinated workers to get tested regularly at their own expense. Speaking with us earlier here on Business World Live, Phil Export Chairman George Barcelon says he agrees that workers should be tested for COVID 19. However, he says private companies or the government should cover the expenses. Meanwhile, the Employers Confederation of the Philippines, or ECOP, believes this new policy will only be a burden for the working class and that the government should instead incentivize vaccination. However, Labor Secretary Silvestre Bello defends the policy, saying that under the IATF resolution, employers have legal basis in requiring unvaccinated workers to get tested at their own expense. Bello explains that this is a valid condition that can be imposed by employers as they cannot make or require their workers to get vaccinated. The country will likely return to its pre-pandemic growth track by the end of next year. That's according to a joint report by the FMIC and UA&P. The report says pre-pandemic growth can be expected in 2022 as business confidence improves and as the government ramps up infrastructure spending. The groups noted that business confidence was renewed by the stronger than expected economic recovery in the third quarter on top of more relaxed COVID-19 restrictions. FMIC and UA&P said infrastructure spending will likely increase in the fourth quarter as election spending simmers, with lineups firming up by end of the year. The two institutions said public-private partnerships in infrastructure projects will also likely continue with fewer impediments. And those are the biggest stories this trading day, November 25, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos, and we are One News. Mask on, wash hands, and stay safe, Philippines.